So you've seen food inflation, energy inflation firsthand. However, inflation for almost everything else is moderating. We saw that with Walmart, Target, so many companies on their conference calls saying, wow, we got a lot of inventory in because supply chain was so bad. Now we finally got some inventory in, but demand has slowed. Even so that from some semiconductor companies as well. Even Apple's talking about it. That means these products in inventory are going to need to be sold at a discount to get them off the shelves, which helps lower inflation. So you're going to see that, and that's really what's sparking this right here. So we separate the core, right? We have the CPI, then the core CPI, which excludes the volatile food energy prices, which is not volatile. It just keeps going up. It's not up and down, up and down. No, it just keeps going up, 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 up. We're going to exclude that. And excluding those two, we're going to see inflation moderate. We will. We've seen it from a lot of companies. They don't have pricing power as much anymore. Some companies still do, but not all of them. And watch the restaurants. Some of them held up well. They've had pricing power, but they're going to have to raise prices again. And how much could you pay for a family? Is it going to be $60, $70 for a family of four to go to Chipotle? Well, I'm used to paying $45, $47. I don't know. But there is a price where people are going to be like, I'm done. I'll make my own chicken and rice in a bowl at home. I'm done. We're pretty close to that right now. As for China, which has also been a drag, right? It's starting to reopen slowly after the crazy zero tolerance COVID policy. So it's a full lockdown policy, full lockdown. And I've seen pictures of this. I've heard from people in China. It's fucking scary in China right now. It really is in a lot of areas. I mean, these forced lockdown, you're seeing people rise and like, we're done with this. But the good news is you're seeing the numbers get better. You're seeing the reopening. So Shanghai, there's companies that monitor the electricity consumption, which is home to the city's large industrial enterprises, but it climbed in May. It's now at 83% of 2021 levels. So it's trending in the right direction, which means things are starting to open, which may ease or help ease supply chain concerns. Again, another positive. With the Russia war and Ukraine still a wild card. Will end eventually, but it's still a wild card, still a lot of uncertainty there. But overall, I'm not surprised by the huge rally last week. And we're incredibly oversold to the point where a lot of great companies, industry leaders, were trading at insanely cheap valuations, which tends to happen during deleveraging periods, when people are forced to sell. When you're forced to sell and you're getting margin calls, you're selling everything. You're selling your good assets. Doesn't matter. I just got to get out of here. I got to get to the market. I got to raise cash. When everyone's selling, no matter what stock it is, that creates unbelievable buying opportunities. We recommended 3 new small cap stocks last week in Curzio Venture Opportunities. Already up nicely on these names, even though we are seeing a little bit of a pullback today. Oil companies are holding in there, and agriculture companies doing well. Mosaic's up. Also seeing a nice bid for crypto, which is pretty cool. Back over 30, holding 30 despite Luna, despite all this, and crypto's going to crash, and it has crashed already. It's been holding that $30,000 level, and we talked about the trillions of assets coming into this industry now, with retirement funds opening up the door to crypto and Bitcoin. I mean, that's huge. You're going to see money pour into this. People want it, and now the fund's like, okay, if these guys want it, this is what we're going to do. But Bitcoin, maybe Ethereum be open, Cardano, some of the bigger names, Avalanche. But you're going to see institutional money start flowing into this industry, and it's holding here despite, we've been below 30 several periods over the past, I would say, month, 2 months, and it's been holding pretty steady here, which is good. Now it's up nicely today. But we did recommend 3 new small caps last week, Curzio Venture Opportunities. Again, ready up a little bit on these names. More than a little bit. But for me, I rarely recommend, those of you know me by my products, I rarely recommend more than 1 stock a month. Right, in each monthly issue. So we did it twice near the bottom of COVID and CVO, twice in Curzio Research Advisory. I think I recommended 5 of the companies, whereas Walmart, Home Depot, Costco, Target. I forgot the other one, but those basically the 5 places that were allowed to stay open during COVID. So let's buy these. Did very, very well on them. Sold out for most of these now. We held on to Target, so we got hit with that 25% loss. We were up a lot. We were up huge on Target. Really, bottom ticked those names during COVID. But now that's how I feel about the markets. If we'll recommend that many stocks right now because of the levels that they're trading at are absolutely insane. It doesn't mean that they can't go down from here. And we did stop out of several names, to be fair, during this 8-week downturn, right? We limited our losses in products. in Curzio Venture and Curzio Research Advisory. We had to, and it gets ugly and crazy there, and a lot of those names are down much, much more, right? Again, everything just completely sold off, didn't matter. Even the FANG names are down 35% plus, some of them. But my point here is that bear markets are great for investors who are prepared and have cash on the sidelines, because that allows you to buy a lot of those great names at steep discounts. And right now, even after last week's 6% surge, many industry leaders, well-capitalized stocks that are growing, good growth models, good management teams, good balance sheets, are trading at significant discounts to the historical average. And that doesn't even sound like too enticing. So, I mean, they're trading at levels, and pre-rally, they were trading at levels that we haven't seen, again, since lows of two of the worst periods in the last 12, 13 years. We shouldn't be that bad. It's scary out there. Yes, we have inflation. Yes, the Fed's tightening, but it's definitely not as bad as then for a lot of these names. So it's going to be choppy, but start picking away. Don't go all in. Just start picking away. Maybe a third of position, 25% position. Build it up. If it surges from here, you own it. If it goes down, you could buy more, lower your cost basis here, because you're never going to pick the bottom and sell at the absolute top, no matter how many trading services you see that highlight the line. Well, we told you to buy here at the low part and sell here at the top. And they circle it, in the commercials and shit like that, right? All these freaking traders. It's awesome. It's awesome. Love it. Love that part of our business. But it never happens, right? It never happens. But buying some of these stocks down at these levels, 35, 40%, with inflation, it's going to moderate. The war is going to end. That's temporary. It's been a little bit longer than expected. The Fed expected to tighten, but they're probably not going to tighten as aggressively after they get to 2.5%. Still a little ways off that. But once we get there, now they're going to have ammo if they want to cut, which there's several firms, investment firms, that are predicting that 2023, the Fed's going to start cutting. And they may cut if inflation does moderate that much. So there are positives, right? A little bit. There's positives. But throwing in how far and how big this downturn is in stocks, a lot of that is being factored in right now. A lot of it's being factored in. Almost every risk that people talk about are risks that we've been talking about for months. What usually means it's factored into stocks. So seeing a little bit of give back today. That was down 400 when I started this, down about 190 now. We see a little bit of give back, but there's still so many names, especially in small caps, that are trading at levels. And biotech, holy cow, biotech has gotten annihilated. You can buy great companies generating revenue. I'm not talking about a biotech with just one drug that you're praying for. It got through phase 1, it gets through phase 2. You're going to earn 5x or 3x or whatever. It's going to go a lot higher. I'm not talking about one product. I'm talking about very good biotech companies generating revenue that are trading below their cash on their balance sheet. And that industry's gotten annihilated. I don't know how much leverage was in there where people are selling these names. It's insane. But that's where you could find. Again, you have to be willing to risk. You take on a lot of risk, but the return, it could be massive from these levels of what I'm seeing. And one of the names that we did recommend in Curzio Venture last week was a biotech name that's generating significant revenue, great portfolio of names, partners with just about almost all the major pharmaceutical companies. And trading at levels down 80, 90% from it's insane. But that's what you see. That's what you see during times like this. So I know it's difficult. I know people are nervous out there. And yes, you did get a little relief yesterday with that rally. But that's what happens. You're not going to catch the absolute low, but start picking away. A lot of this is being factored in. It's going to be choppy over the next 6 months at least, as we see oil prices continue to rise, as we see food prices continue to rise. But once those level out, if they level out, we could see the market really, really take off from these levels.